Hi everybody, Adam Stern, CEO of Strat SFR here. The week back off of Memorial Day weekend and also the IMN conference last week, and I made it a habit to want to do these summary videos, to kind of sound off on what I found out when I was at the conference and kind of talk about the strategies that I heard from various different buyers and sellers and service providers when at the conference, and it's been an interesting one. I went into this conference really not having any specific strategy other than trying to figure out what buyers in the market are doing and trying to figure out if there's some commonality between various buying groups, from the largest institutional investors that I know all the way down to smaller private investors. And I came out of the conference with a few key takeaways, and I wrote a little bit about it in this email, and I just wanted to talk about it. Since it's a nice day out here in Mooresville, right outside of Charlotte, at my house, and I want to get out of the office for a little bit and talk to someone, including a video that's not on the computer or on the phone. So here's basically my takeaways. The party is most definitely over, and I don't want to sound like I'm a Debbie Downer, or I don't want to make it sound like there's some big opportunity that has passed. It's certainly not that. But the party that I'm referring to that's really been happening over the last decade kind of reflects my view of when I used to go to IMN conferences, and my entire charge was to find out what the large institutional investors were doing, where they were buying, where the capital was being spent, and trying to figure out how to grab hold of or keep any number of large accounts where, essentially finding opportunities for those hedge funds and institutional investors was my charge. Because all I needed was a handful, or even one really good one, to make a fair amount of hay in terms of selling portfolios and selling built-for-rent projects. The party that I'm talking about is that, which is the land grab and the property grab that was going on over the last decade, where a relatively homogeneous amount of properties were being pursued by various institutional and fund investors. And that kind of led the strategy of even smaller investors buying those kind of assets with the exit to the larger players in mind. The capital for that kind of buying activity, where they're buying kind of lower to middle range, mid-price properties in the top 20 markets around the country, those acquisitions have been tamped down by the institutional investors because the numbers don't really make a whole lot of sense anymore. And what has been left in its wake are a lot of those operators, especially middle tier operators and smaller operators, kind of pursuing more nuanced strategies that no longer have an end point of selling those middle price properties to the largest institutional investors. That party that I mentioned that I think is over is a reflection of the fact that that big pot of capital was billions of dollars that were being allocated toward that very specific asset class is now no longer being programmatically deployed, but rather sporadically deployed. And the volume for those kind of acquisitions have, been cut in more than half. I would say it's probably down by 80%. So the industry, I think, is reverting back to what the SFR industry probably was before this big property grab, took place, which are dozens or hundreds of smaller operators with very niche and nuanced strategies that has money behind it, but these strategies differ more widely from buyer to buyer than I've ever seen before in my time in the SFR industry. I've talked to, and my team talked to, more than a dozen buyers that are in various markets, not including and not including the top 20 markets around the country, to deploy their capital in nuanced ways, buying strategies that include, and I won't outline them for you here, but the idea being capital sees a trend, they want to capitalize on a trend. The trend is not national, sometimes it's not even super regional across states, it's market specific. And they want to get their hands on very specific assets and very specific geographies in those assets to fill up that strategy. So before, when I really only needed one or two big accounts to really make my brokerage operation sing, now it's all about meeting lots and lots of different smaller operators that have strategies that we think, at Strata at least, we can find sellers to accommodate selling the kind of assets that they want to buy. So it's not about grabbing one or two large institutional accounts anymore. It's about meeting lots and lots of buyers. And for us, trying to find strategies that overlap with different buyers so that we're not going out and just buying for one buyer or searching for one buyer, but going out and searching for assets that might fill up the bucket on one or a handful of different buyers with a similar strategy. So I think we're reverting back to an industry of niches, and it's up to us as brokers, up to me as a broker, to try to apply our resources and our acquisition acumen to try to find assets that fit that strategy. Another thing that came to light is how really valuable builder relationships are. A lot of the biggest institutionals in the country have formed really strong relationships with the top production builders in the country, and a lot of them still have the need to buy very specific assets in very specific regions of the country, and the numbers they need to reach the certain cap rate that they want, to my mind, is still hovering around a 5.75% cap rate. If you really look at retail values that sellers, including builders, are selling for, that value retail, you got to subtract out all the disposition costs, which now include a rate buy down, which is a big chunk of their profit. So if I look for builders right now that have not even excess inventory, but inventory to sell, and I do the math, and I figure retail value minus rate buy down costs, minus brokerage commission, minus closing costs, and any other marketing cost that it takes a builder to sell their properties retail, and I net them out, usually I'm coming out with a discount of anywhere between 10 and 15%. And if those properties are in an area that have strong enough rents to reach that 5.75 cap rate range or about, then those are really solid builder relationships for any one of my buyers to have. Certainly as a broker, those are solid relationships for me as a broker to get inventory from and then expose it to my network of buyers. So those builder relationships, which everyone was asking about, super important. And really what this changes for Strata is we've always been a company that looked at buyers first and then found assets later. Unlike regular brokerages that go out there and try to find listings, right, to sell to whatever buyer we can find by marketing, what we've traditionally done is we try to find the vein of gold amongst all of our buyer clients and then try to find sellers that fit those strategies. It used to be, we didn't have to find that many sellers that fit into varying strategies because the strategies didn't vary very, very widely. Now, we've got to find a wider swath of sellers across a lot more markets to fit the more nuanced buying strategies of a much larger group of institutional, private, and private investors. So what we're going to be doing at Strata over the coming months is really figuring out what buyers we want to spend the most time with and then advertising that buyer's buying strategy. Not the buyer's name, because we want to keep that to ourselves. We don't want to be circumvented. We want to basically keep the value to our sellers being, we know buyers that have money to deploy, we can find them, we have relationships, and we can actually pair one seller with one or a few buyers. That's our strategy for the months to come. And coming out of the conference, I'm pretty jazzed. I've got a new breath of life in me. I know there's a lot of work to be done, and it all comes down to this. SFR, probably more now than ever, is seen as a safe and reliable asset class for capital to want to get a moderate return. And if we can pair the right sellers with the right buyers that have already raised capital to execute on these strategies as brokers, well, we're also in high demand. We're a high value contact for anyone in our network. So I'm excited. I've got some new life in me coming off this convention. What I want to do is really dig into some of the buying groups we met, figuring out what those strategies are, and then finding the markets and then the sellers that fit with those strategies. So you'll be seeing more from us on that front. If you're a buyer and you want to share your buy strategy with us, there's a link below that allows you to do that. We'd love to hear from you. Again, Strata SFR is a single family rental portfolio and build for rent brokerage. We mainly broker existing SFR portfolios and scatter site new construction or build for rent projects to our network of buyers. And we'd love to talk to you. So hopefully this is interesting. Thanks for listening.